Hello, hi everyone. Give me a minute. All right, great. Hi, evening everyone. Okay, welcome to Cashflow Live with Terence session. So we're gonna do this for once a week over here, right? From the month of July forward. So let's get things started over here. Right now, so we're gonna keep things really, really simple when it comes to cash flow live with Terence. So let me lay out our guides over here. So if you're already joining us, do drop a note, say hi. Right, if you have not already done so, please grant access to StreamYard over here. So we'll be able to see your comments on the back end over here on our screens. Okay, if you don't grant the access, we won't be able to know who's commenting over here. All right, hi Gary, hi Uncle Fu, hi Ryan. All right, I hope I got it right. Either Ryan or yeah, it's Ryan. All right, hi Jason, hi Maureen. All right, hi Min. All right, hi YC, hi Stanley. Okay, great to have all of you join us over here. Right now, so if you're joining me right now, or if you could help me just share out the videos, right, that would be great because this is going to be a once a week session over here where I'm committing to building a portfolio live, all right, as we track our IMP stocks over here and a good basket of stocks, right? So the aim over here is really, really simple, all right? It is just to show how simple it is to actually plan and create a double-digit returning portfolio, all right, on an annual basis, on an ongoing basis as well. All right, so this is our aim and this is our guide for today's agenda. Okay, all right, great. Thanks for the clarification, Ryan. All right, now, so in this public session and cash flow live with Terence session, we're going to cover two main strategies. All right, one, we're going to make use of stocks, of course, that we verify and we approve of. All right, and two will be the strategy in play. All right, so the strategy in play will be selling naked puts or selling portfolio puts over here. All right, so we're going to take a very simple concept of doing everything cash secure. Okay, so what we're going to do is build a very, very simple portfolio that continues to churn and continues to build portfolio cash flow, all right, to the tune of double-digit returns and above. All right, so we're going to see if we can create, a targeted 20% and upwards in terms of return over here, all right, during all the trades that we've been taking. All right, so we're going to do one trade a week over here, and each week I'm going to schedule a stock we'll be looking at. All right, and then we're going to pick a trade on it, all right, that allows us to achieve the double-digit return guidelines. And we're going to set up a spreadsheet to track the performance of these trades as we move along. All right, so moving forward in episode 2, what we're going to do is we're going to do an update on the trade that we have running over here. All right, and then of course moving on to the new trades that we're taking on. Right, so this is going to be done on an ongoing basis. So let's see our performance, as we move along in the coming months and of course the years ahead. Okay, right now, so if you can help us just share out the video, that would be a great help over here. Right, so as we start to show more people how simple it is to actually start investing, build a portfolio, and create better than mainstream financial institution returns over here. Okay, so let's get started for today's session. All right, today is a great day to get started. All right, we have a day where market is on a rest mode over here. All right, markets are still dominated by lots of volatility in the marketplace. All right, so we're gonna have all those up days over here as there's a built-in inherent bullishness in the markets. All right, although it seems like there's a lot of bullishness, but do be very aware because this bullishness is currently led by the cohesiveness of just two main sectors: the cohesiveness of an update in the financial stock sector, right, and of course the tech sector, which is still staying strong. Right, so be very aware, like I said, because anytime things can turn. All right, why do I say things can turn? Because right now, right, we have things or daily news events that can shake the market almost immediately. Right, so when you have a day where you have the financials coming off, right, and leading to fear that drives the tech sector immediately downwards over here, you could start having those S&P down 80, down 100 points kind of days over here, right? Purely because the tech has been hitting new highs, right? And I'm not sure if you're aware of this as well, but the tech sector as a whole generates or commands more than 20% of market cap when it comes to the S&P 500 components. Right, so big tech, because of their market cap over here, has started to gain heavier and heavier weightage on the entire S&P 500 index. Okay, all right. So if the index is going to come hard downwards, all right, one sector is going to definitely lead this downside move. Next is going to be the tech sector. All right. So if you're still heavily invested in the big 4, big 5, big 6 tech stocks right now, right, please have your cut loss measures or get out clause built in place, all right, because when it turns, it may be swift, it may be fast. Okay, all right, so do make sure if you're trading them, great, you should be sitting on some great profits right now. If you don't intend on taking any of these profits at the moment, right, so do structure some trades out there. Right, so what you can do is, if you have like a buy call position right now, you could convert it to, kind of like a, I wouldn't call it a debit call spread, but you could convert the buy call into a call spread. All right, so you could sell, a call option over here that is actually, below the current stock price to kind of hedge that risk in case it comes down swift and fast. Okay, so just some ideas over here. Okay, now, so let me quickly get into today's trades and today's idea, because the whole idea of Cashflow Cashflow Live with Terence is a very simple affair. It's meant to highlight a particular stock, look at all the possible trades, and get everything done and dusted in like 15 minutes to half an hour. Right, so it's to highlight the simplicity of building a portfolio, yet the consistency of being able to reap, all right, and garner 20% targeted returns on an annual basis ongoing. Okay, so today we're going to start the portfolio from scratch. Okay, which means right now the portfolio has absolutely no stocks. All right, we're going to start with our first stock, and we're going to consistently build on one stock each and every week. Okay, all right, just as a disclaimer as well first, all right, a standard disclaimer, there is a risk of loss, all right, when it comes to investments over here. So if you're going to go ahead, and do understand that everything that we do and every stock that we discuss over here is purely for educational purposes. So do weigh your own risk before moving ahead with any decisions that you're going to be making on your own. Okay. All right. Now, so let's get started with today's session officially. Okay, so I'm going to start sharing my brokerage platform view over here. All right, and I'll go into a guide of why I'm kind of looking at this stock over here today. Oh, let me go to the fundamental view first. Okay. All right, I think we can do this. Okay, great. Now, so if you're seeing my computer screen right now, so what I'm going to do for our first trade today is really to follow on the stock that we have discussed during our recent US stock tryouts. So in our recent US stock tryouts, we covered this stock called KMI, right, or Kinder Morgan Inc. Right, so I like to develop further on it and actually start taking and designing a trade on this stock. Okay, now, so Kinder Morgan Inc. right now today is down. All right, it's down currently, so it's below 15. Right, so that's a great start for us because we get to structure a trade on a day where the stock is actually going down. Right now, so right now, just based on some quick fundamentals over here, the stock is trading at about 17 forward PE. Right, 17 forward PE over here. All right, let's see if I can get some quick ratios. Debt to equity ratio of 0.95. Right, one of the reasons why I really like KMI is because I do feel that Kinder Morgan and the two main owners, right, have proven to be very shrewd, right, with the way they manage the funds and the capitals in the company. Right, so they started from literally a small payout, which was given to them when they left the main company or their pre-company over here called Enron. All right, and we all know what happened to Enron after that. So these were great guys that were really great with their numbers over here. So with the compensation package, what they did was they started going around buying pipelines across the US. All right, so they started from just one pipeline and now they have grown themselves into a conglomerate. Okay, so what they've been doing so far is they've been running pipelines, supplying petroleum, natural gas, and other form of gases like carbon dioxide throughout states across US. Okay, now so having said that, so most of our details have been covered also during US stock tryouts. So what I'm going to do is I'm just going to move ahead. Right. So one thing you can see over here is the financials. Right. So financials over here, what I want to take a look at really is a general view, right, of what happened 10 years ago. The sales revenue, which is the first line you're seeing over here on the screen, right? The sales revenue since 2010, all right, has gone up, 10 years later right now, right? So we have seen the sales revenue of this company, escalated by about 50% from their original amount, right? So what's really, likable over here is you can see that the gross margin of the company has stayed relatively high, right? So they've increased the gross margin to over 50% over here, right? And kept it consistently at above 50% over the last couple of years, right? So this shows, their shrewdness in terms of managing their profitability of the company, right? And the operating margin has also been kept high, right? Close to the 30 mark over here, and it's constantly increasing over the years. Okay, all right, now, so having a look at the fundamentals and, making sure that they check out over here, right? So, just before we get in, what we want to do over here is we want to head over and get our main news source right. Okay, so one of the websites I use over here is actually Seeking Alpha, right? Now, so as you can see over here, Seeking Alpha over here has, in recent comments, like in May, all right, in May over here, all right, so we have some recent articles in May, all right, where, you have these authors over here of these newest articles that are actually very bullish on KMI as well, right? So, we have not only the sentiments of analysts over here who are bullish on the stock, all right, we also know right now that, of course, the managements are very, very shrewd in terms of their managing of capital with the company, right? And of course, Seeking Alpha itself has a rating, right? And they even have a bullish rating on Seeking Alpha authors, right? At which we saw just now, right? Even Wall Street, all right? Wall Street analysts have, a pretty bullish rating on the company itself as well. All right, now, so once again, if you're not aware or you did not join us, it operates as an energy infrastructure across North America, right? So a company operates through natural gas pipelines, product pipelines, terminals, and CO2 segments. Okay, all right, now, so we're done over here. So I'm going to move over and structure the trade and, tear down the numbers behind the trade over here. Okay, now, so what I'm going to do over here is I'm going to go take a quick look at the charts, which we have done so as well. So we have S&P right now down by about 0.5%, all right, 0.5% over here, all right, which is just a minor correction from the last two big up moves they had since Thursday, and then of course yesterday as well. Now, so what we want to see over here is first, let's go to a longer time frame chart. So I'm just going to use the chart as a small guideline in terms of what would be a good strike over here for a put option that I want to sell. Right, so we're going to start off every trade over here with a naked puts. Right, okay, so naked puts allow us to basically buy, or acquire these stocks on what we call the cheap. Okay, so the stock is trading at 1470 today. All right, so I could do two things. I could go out there and buy the stock today, right, and then perhaps turn around and do a covered call, right, to generate more income. Right, or the other way is to start off by getting paid, right, with an attempt to buy the stock at a cheaper price. Okay, so that's what I'm going to do over here. All right, so I'm going to attempt to buy the stock at a cheaper price, and I'm going to get someone to pay me, all right, while I wait to buy those stocks at the cheaper price over here. Okay, all right, now, so for Kinder Morgan over here, let me zoom out a little bit. We obviously have the March crisis where we have all the stocks slammed down, right? And Kinder Morgan hit a low of around $10 over here, but it has since steadily recovered, right? And quickly, just 1 month later, we've seen it recover and started channeling over here, right? So what we have is we have actually a stock that is still currently channeling, all right, or moving within the channel itself, right? So we have a channel bottom over here, right? That's around 13.95. All right, and then we have currently a channel top over here, right? That's currently around 16. Right, so we are continue to expect the stock to trade between 13.95, which is $14 level, right, to a high of about 16 over here. So this creates a very great zone of generating cash flows by selling put options on a fundamentally sound stock, right? And it's a good thing because we have the stock down by about roughly 3% today, right? So it's stock that's down 3% today, all right? So let's see what kind of trades we can get. So what I'm going to do over here is I'm going to look to sell 18 September. All right, I'm going to look to sell 18 September over here. And I'm going to look to sell the 13 strike put. All right, the 13 strike put over here would pay us about 52. All right, so the last done, as you can see over here, is about 52 cents over here. All right, so we could get this trade done for about 52 cents. All right, and let's do a quick calculation over here to get things right. So if I'm going to do it via a cash secured put, all right, cash secured put. So what I'm going to do is I'm going to collect 52 cents in premium, all right, 52 cents in premium, all right. But what I need to be ready for, the responsibility I need to be ready for is the obligation to actually acquire KMI shares at $13 a share, all right, $13 a share. So my investment or my cost of investment for doing this trade is going to be $13. Okay, $13. Okay, so what I'm going to do to calculate my ROI is going to be 0.52, which is the premium I've collected, and I'm just going to divide it by the cost of my responsibility, which is $13 over here. So if I divide it out, you can see, all right, that this trade is going to pay me a 4% return. All right, so it's going to be a 4% return over here, all right, in the next 73 days. Okay, so I'm going to take 73 days as a period of about 2.5 months over here. All right, 2.5 months. Okay, so what I'm going to do is I'm going to take this 4% over here, all right, divide it by the total period, which is going to be about 2.5 months. Okay, all right, 2.5 months over here, right? And then after I've done that, I'm just going to multiply it by another 12 months, right, to kind of annualize the possible returns if I'm able to do this trade over and over again over the course of the next 12 months. Okay, now, so that brings me very, very, very close to the 20% mark as we've seen over here. Yeah, okay, all right. So this is definitely one of the trades that I'm looking at taking and I'm looking at structuring over here, right, if I'm building a portfolio. Yeah, okay, all right. Now, so as you see, the stock is quickly recovering over here. So the bid and ask premiums is quickly reshuffling, right? So what you can do right now is you can aim to get this trade done, right, for anywhere between 50 cents to 52 cents today, right? 50 cents to 52 cents today. Yeah, okay, all right. So let me quickly just structure an order over here, all right, and see if the market will actually bite on a premium that I've just mentioned over here. All right, give me a minute. All right, if you have any questions on the calculations or designs on the trade, all right, please feel free to leave it in the comments. All right, so yes, this session includes your availability to ask simple questions on what is being discussed. Right, if you happen to be our community member, all right, you could always structure trades that we have been taught, right, from our strategy terms. Okay, so you don't have to necessarily follow the portfolio approach that we're doing in this Cashflow Live with Terence sessions. Okay, please feel free to redesign your own trades over here. Yeah, okay, now, so quickly give me a minute over here. I'm selling the 18 September 13 strike put option. Okay. And 13 strike put option. Okay, that is done. All right, give me a minute. Let me double check my premiums. Okay, our premiums have dropped because the stock is recovering quickly over here. All right, so I'm gonna try to do this right now for about 49 cents. All right, 49 cents. All right, so 49 cents is an immediate fill actually. Yeah, all right, I just placed the account on one of my brokerage accounts, all right, and it's actually an immediate fill over here. All right, give me a minute. I just want to Sorry. I'm just trying to structure the design over here a little bit. Okay, great. Now, give me a minute. I just want to share the screen to show all of you that the trade was actually filled. Okay, sharing my screen. Okay, so what you saw over here is about 2 minutes ago, right? I've submitted the order, right, for KMI September 18, $13 put, right? And it immediately got filled over here for 49 cents premiums, right? 49 cents premiums, right? Just ignore the brokerages because I have a couple of accounts sitting in different brokerages. So I'm just using this particular one for this trade over here, right? So all I'm trying to do is to, try to establish a trade and to show all of you that it actually can be done for the price that I'm suggesting over here. All right, and since this is a field trade, what I'm going to do right now is I'm going to lock it down, all right, as our first trade over here in this segment, right, in this segment. Okay, all right, Green, give me a minute. I'll calculate the returns over here again, all right, to let you have a look. Okay, all right, now, so I'm just going to quickly go into the Excel sheet. Okay, so as to be able to lock down our trade that we have done today. All right, okay, so if you can see the Excel sheet over here, so this is going to be our cash flow with Terence track record. All right, so today I'm selling 3 of the KMI. All right, naked bids. Okay, naked bids. All right, so the expiry is going to be 18 of September. All right, so that's the expiry. All right, so I'm just going to relabel this. Sorry. Expiry date 18 of September. All right, so the strike that we have sold over here is actually 13. All right, 13 strike. Okay, so the entry date is going to be today. All right, which is 7th of July where we did this trade. All right, and we got this in for a premium of 49 cents. Okay, all right, now, so we're going to track this trade over here. So if, we're going to track it all the way to September and see if it expires, or, if we catch a good break on KMI shares and it actually starts going up and climbing higher, we may actually close out this trade for a profit before the expiry date itself as well. Okay, so this is definitely our first trade that we're going to lock for our first live session together, right? And we've just generated $49 in cash flow for each contract traded. Okay, each contract traded. Now, so based on the 3 contracts trade that you have seen on the brokerage platform earlier, all right, just give me a minute. Okay, as you can see over here, it's a 3 contract, 3 quantity trade. Okay, so I've just generated close to almost $150 in cash flow from these 3 contracts over here. Right, so $150 in cash flow from these 3 contracts. Right, so that was just done in like a couple of minutes after detailing the trades with all of you. So we've just generated like $150 in cash flow over here in this session, right? In this session. So that's the trade that we're going with over here. And let me quickly draw out. All right, let me quickly draw out what's the possible scenario and possible outcome, all right, on this trade over here. I'm just toggling between screens, so give me a minute. Okay, all right, now, so this is going to be how the trade looks like. So KMI today is at 14.75. Okay, at this moment. So what we did over here was we sold the $13 puts. Okay, and this expires only in 18 of September, right? 18 of September. So from now to then, we have about 74 days to expiry or 73 days to expiry kind of range. Now, a few things can happen. All right, that means KMI will continue to just sit around this spot over here. All right, so as it sits around this spot, the premiums aren't going to do much. All right, because the expiry is still quite far away. So 49 cents over here is going to count down. all right? But it's going to do so very slowly. So it doesn't make sense for us to take any profits along the way. Right now, of course, the next thing that could happen over here is if market corrects further, the stock could go down lower, all right? But we're just going to sit on this position because as long as all the way to September, as long as it doesn't break this 13 line over here, nobody is going to make us buy the stocks, all right? Because this is basically an obligation to buy a stock. Okay, all right. At what price? At this strike price you have committed over here at $13. Okay, so as long as the stock stays above 13 by the expiry date, this option is still going to expire worthless. So when that happens, we could sell the next set of put option on this particular stock over here as well. Okay, now, of course, what's going to happen if Terence, if it goes below $13, right? If it goes below $13, for the sake of cash flow live with Terence, what we're going to do is we're actually going to take, all right, the stock in our portfolio. All right, okay, so this is how the portfolio will work. We actually acquire the stock, we'll fulfill the obligation, and then we'll possibly turn around and start selling call options on these stocks. Okay, all right, so once we own the stock, we're entitled to the dividends that the company pays. And on top of that, I'm going to sell call options to generate more income as an option seller as well. All right, so this is the direction of how cash flow live with Terence is going to be built on. Okay, now, in the event that, we have the stock trading all the way back to 16 again, which is the range, right? It's expected to move up and down within this range. Okay, so when it goes to 16, if it happens very quickly over here, one thing's going to happen is when the stock goes up, all right, the premiums, all right, of this option is going to start dropping. All right, think of it this way. When the stock goes up over here and it's further away from this put option line that we've drawn on the screen, all right, think of it as the risk has kind of dwindled as well. The risk of your customers making a claim on you has dwindled down. That means the risk has become smaller. So because the risk has become smaller, right, what happens is the probability of a claim is going to be less likely. So whenever there's a probability of claim that is dropped right now, the premiums associated with that particular option will drop along with the probability. So when the premiums drop, we could actually think about paying the smaller premiums right now to close the trade and actually realize the profit, right? So that's a possibility as well. So there are a couple of ways to make money over here. Yeah, okay. All right, now, so because cash flow live with Terence is built, okay, I'll just quickly answer this question over here from Kenny. All right, so Kenny basically asked, Terence, why did I choose 74 days to expiry instead of selling a shorter term one? All right, one, because by going out further over here, I don't have to worry about the whipsaws in the market. All right, so it pays pretty well because it allows me to hit my target of close to 20% if I annualize the rates over here. All right, plus from now all the way to September, all right, I won't have to worry about this position. All right, of course, if it goes up in my favor, I'll realize my profits earlier. All right, but if it doesn't, I have a good premium, a good trade that allows me to sit all the way to, all the way to September over here. Right. Plus, if you really look at it as well, all right, I'm not going to be hit until the stock reaches $13, and the stock is at $14.75 right now. So the stock would have to literally drop by $1.75 in order to go below 13 over here. And if you work it out over here, right, $1.75 over 14.75. All right, sorry, let me pull out a calculator over here. $1.75 divided by 14.75. Right, that's about a 12% drop. All right, that means you're looking at a 12% drop from the current price, all right, in order for you to need to acquire these stocks. So that's also the safety margin that I built into this particular trade, right? Because I'm willing to go out all the way up to 70 over days. All right, Kenny, I hope I answered that question over here. All right, so let me move on to my next question. All right, so Gwyn asked over here, Terence, how did I get to 0.192? All right, so all I did was this, to calculate my ROI. Okay, so ROI, we're going to do it in two formats over here. First, the ROI on this trade. Okay, so the ROI on this trade is going to work out this way. All right, I've collected a premium of 49 cents, and my potential obligation is to buy the stock at a cost price of $13. All right, $13. All right, so this worked out to a rate of 0.49 divided by 13. All right, which is it's going to change slightly because I based it on 52 just now. All right, so 3.77%. right? So this is going to be a 3.77% returns in 73 days, all right? Okay, so 73 days. What I did over here was basically to consider this as 2.5 months, okay, 2.5 months over here, right? Now, so all I did was to divide this rate by 2.5 months and then annualize the rate by multiplying by 12 total months in a year, right? So if I take 3.77 divided by 2.5 and then multiplying it by 12 after that, all right, it's gonna bring me to right now 18.1%. All right, annualize. Okay, annualize. Okay, Gwyn, that's how I got my calculation over here. So I hope that kind of clears up your doubt as well. Okay, Gwyn. All right, great. Let me address Christine's question. All right, now, how do we ensure we do not overtrade based on the capital we have? All right, Christine, for Cashflow Live over here, because we are building a portfolio on stocks that we are willing to own, all right, so you realize for every trade in this portfolio that we are building, we are putting up full cash, all right, to be capable of actually acquiring the stock. So if you're doing one contract over here, all right, you're looking at $1,300, right? $1,300 to acquire 100 of these shares. One option contract is equal to 100 shares, right? So 100 shares times a commitment of $13 to acquire it is actually 1,300, right? 1,300, right? Now, so that's the basis that we're going on over here, 1,300. Okay, so I'm basically generating a cash flow of $49 on every $1,300 of investment over here, right? Should I need to buy this stock? Okay, all right, Christine. So as long as you're set aside at $1,300, then there's nothing to worry about when it comes to over trading over here. Yeah. Okay. All right. Anyone else with any questions over here? All right. Otherwise, this is the one stock that I want to discuss in our session today. Right, and the stock has already started jumping back up, right, from the losses that it had on the opening. All right, so stock has since bounced back to like 14.85 currently, right? So you may or may not be able to capture 49 cents in premiums anymore, right? But decide, do your calculations, and if you can accept the ROIs that are being generated on the stock, right, you can start looking at building a portfolio around it, right? So for those of you who are still not familiar, right, over here, what you can do over here is this, right? You could head over, right? Give me a minute. Irene, I'll answer your question in a couple of moments, okay? Right, so for those of you who are not familiar, right, with the strategies that are being discussed in the session today, right, do head over to our website, which is impossibleinvestors.com, right? Okay, impossibleinvestors.com. Let me just put up the website address over here. All right, it's at the bottom of the screen right now. So head over to the website, all right, just join the challenge for Project Options Cashflow, right? So join the challenge for Project Options Cashflow, and it will start to send you the daily strategies, all right, day by day over here of what we've covered over the entire month of June, right, for Project Options Cashflow, right? So today what we're discussing is actually the naked put trade over here, simply selling a put option, all right, and we are making it a cash secure trade, okay, cash secure trade over here, okay, all right, now, so we will be actually really soon, all right, launching our Cashflow Gone Mad live trading sessions together with me, all right, and earnings seasons are around the corner as well, all right, so we will be relaunching the earnings madness week, all right, which is trading around the earnings period as well, all right, so we have retuned that, we have refined that for this upcoming earnings seasons as well. So if you have interest on generating great trades with great returns during earnings seasons, all right, do opt yourself in as well. All right, to opt yourself in, you can also just put yourself on the waiting list for Cashflow Gone Mad. Right, so we can send you an invitation when we are launching up both the earnings madness week together with Cashflow Gone Mad. Okay, all right, now let me answer Irene's question. Terence, will you be doing other strategies for this stock? All right. You just broke my surprise over here, Irene. You just broke my surprise, because right after this session with the public session, right, I'm actually going to turn around and go ahead and announce a Facebook live session with the community. All right, so I'm actually going to turn around after this session ends over here, all right, and actually start off a surprise Facebook live session with the IMP community over here. Right, so in that session, I'll be discussing further strategies that we'll be doing or possibly can be doing on this particular stock over here. Right, so do just await the session after we end this one over here. All right, Ari. Okay, all right. Chin Kyung. The stock that we've traded over here is on the IMP list. Yes, it follows our criteria over here, but it may not have been included in the list because it has not fulfilled the necessary number of years required to be added to the list. But it exhibits the fundamental characteristics that we want in an IMP stock, in an IMP company. Okay? Yeah, all right, Chinga? So we may cover, predominantly, we're going to cover IMP stocks, but at times we may also cover fundamentally sound stocks over here, right, where we deem they are fundamentally sound and we want to capitalize on the undervalued natureness of the current stock price in the current market. Okay, all right. Any questions before we put the session today to an end? All right, any questions before I do so? Right, this is time for you to raise up any questions that you may have. All right, before I do end the session, I'll just put up the trade details over here. All right, so what we've done today is we've done a live trade over here on my account, right, where I've sold 3 options over here on KMI. Right, we did a naked put for 18th of September expiry, right, for a 13 strike put option, right, 13 strike put option. All right, and we did it for 49 cents over here. All right, so I verified that by showing all of you that the order was actually filled. Okay, all right, so it's a verified trade. So we're going to keep this as an official trade in our official portfolio that we're building over here for this cash flow segment. Okay, right. If there's no questions over here, all right, I hope all of you enjoyed the session over here with me. All right, it's going to be a short, quick session. Today is the first one over here. So we dragged over the half an hour mark. Right, but in our subsequent sessions, it's going to be smoother. It's going to be less detailed over here because everything is going to be similar. All right, so it's going to be much more well-oiled over here, and we aim to complete each session over here in just 15 minutes to half an hour. All right, so it's going to be a short weekly segment over here, 15 minutes to half an hour, right, where, you know, if you're going to share this post over here, you could share with comments saying, you know, how to simply build a portfolio that returns double digits on a per annum basis. All right, so if they are interested to find out more on this over here, feel free to join us in this session because it's actually free as well. All right, so they can actually join us in this session live each and every week as we do so and pick a trade to establish a trade on, right, and find out if, you know, they would like to build a portfolio that's simple as this, right, because obviously there's many ways to make money, many ways to build a portfolio. What we're going to highlight over here in this cash flow live with Terence session segment is actually the simplicity of actually achieving such a return. All right, you could trade, you know, actively and make 20% per annum, or you could just pick out a trade in 5 minutes, send out the order, and still make the same 20% returns. Okay, we choose to simplify things over here. All right, so we can focus on, you know, time over here for, you know, our own pleasures and what we really enjoy doing, rather than being stuck in front of the monitor and tracking all our trades all night long. Okay, all right, just a quick question. Jun Hao, is there any issues if the trade overlaps with earnings announcement? No. All right, because these are portfolio-based trades. So for portfolio-based trades, I'm going to totally ignore the essence of earnings itself. All right, okay, because I'm selling all the way to October, September. All right, so yes, earnings, which is coming up soon, right, may impact the stock price in the near term, right? But I have an option that only expires in like 70 days from now. So I have time. I have time. And plus, the guideline that we've said in this session over here is I'm actually fully prepared to buy the stock, right, if it goes below $13. right? So that's why I've set aside $13 as my investment for this trade. If anything happens, I'm more than happy to acquire the stock at $13. Okay, all right, Chin, I hope I answered that question as well. Right, is there any further questions? All right, let me just quickly pop over to the actual Facebook itself, because I do realize that at times over here, sometimes it doesn't get picked out. All right, it doesn't get picked out over here. All right, so okay, seems all good. Seems like I've not missed out any comments or any questions over here. All right, great. Now, so this is the end for our first cash flow live episode with Terence over here. So do join me next week as we plan down our second trade on similar concepts and similar terms over here. All right, so if you have friends who are already buying US stocks, all right, get them to come on board. All right, see how selling a naked put over here would actually let them better their returns, or perform better over here, or actually to buy these stocks at a much cheaper price and get paid while they're waiting to actually bargain hunt to a certain extent. Okay, all right, so share it out, share this session out in your Facebook feed, your Facebook posts, all right, and also make sure you are in our Telegram channel. All right, do make sure you are in our Telegram channel, because all future sessions will be notified. All right, it will be notified over here when the session goes live. All right, like we did today, the Telegram channel. All right, so do make sure you're in our Telegram channel, so you will be notified beforehand when we go live. Right, and you will not be missing the session itself. Right, so if you're not joined our Telegram group, just scan the QR code at the bottom over here. All right, or type out the link in your web browser. You'll be prompted to the Telegram app. All right, and just click the join button after that when you see the channel pop up. Okay, thank you very much for joining me in tonight's live trading with Terence over here, Cashflow Live with Terence. This is me signing off. All right, and thank you for joining me over here. I hope you can bring more people along for the next session. All right. Bye-bye, everyone. See ya. Welcome, Benjamin. Welcome, Christine. I hope you enjoyed the segment over here. All right. Thanks, Vincent. All right. Thanks, Vincent. All right. Welcome, Vincent. No problem. Okay, have a lovely night, everyone.